Good morning, good afternoon, good evening, folks. Michael Zuber, One Rental at a Time, back with his good friend, Mr. Stephen Dow. Stephen, before I forget and I get on a roll, please do the marketing thing so you don't get in trouble and I don't get in trouble.
I was just going to see if you were going to remember. Though, again, I work very happily for Velocity Mortgage Capital. All the ideas and topics discussed on this 90-minute discussion are that of our own, and let's get it going.
There you go. So kind of here are the rules of the road. Again, this is everyone on this call is one of our students, so we speak the same language. So hopefully we can stay with that. The reason I do this for my students and not directly on YouTube is because I am frankly afraid of trolls and haters and all of that destroying the session. So that's why these deep dives will always be with all of you. So thank you for being a part of this. We are going to do these things as chat. So please start listing your questions right away in the chat function. I will be moderating the chat. As always, I will go top down. Anything is fair game, 50, 40, 10 seller financing.
Yes.
I will kind of separate the questions if it's mine or Steven's. If I don't know, as always, just tell you that I don't know, as always. So why don't we, I'll pull up the questions, keep putting them in. But again, the other thing I want to let you know is I am ecstatic about doing these deep dives with you. I think they are both an opportunity for me to learn more, but also for all of us to go into areas that probably aren't my expertise, right? What did we do the first time? The buy box, clearly an area I'm comfortable in. But I think as we go forward, we're going to start doing these deep dives in areas where I'm going to be the student, just like all of you. So this morning on my daily financial news, I highlighted self-management. Wouldn't that be an awesome topic? I've never done it. We happen to have two of the three amigos. That's all they do. So I'm gonna push, ask Dion and Matt to do a deep dive one of these Saturdays around self-management. We're going to do something clearly around pre-foreclosures. It was the last bonus content we added, and I can't wait to ask questions. The one and only Ty, and probably get another content creator to help. So all of these areas, if you have an idea, please share it. The worst thing that will happen is I'll say, don't know anyone. As always, this channel is for you. So let's get going with the questions. Let's make sure I go to the top. So, hey, Nathan, how are you? Good morning. Thank you for being here. Karen, thank you for being here. Let's see. Does this arrow work? It does. Oh, it does. So we go Karen, Fatsal, Chester, Todd, audio is great. Cool. Alan, good morning. Pam, Sean, Shailene, sorry if I mispronounced that. LD, whatever. Hi, how are you? Samitra, good morning from Canada. How you doing? Doug, OE. All right, Steve, there's this question. What are some of the basic qualifications? Steve, this one's probably for you. What are some of the basic qualifications you look for when people come to you asking about the 50, 40, 10? Why don't you take that first?
Typically I just ask if the scenario kind of fits, because not all scenarios will fit that dynamic. Mainly if the seller has enough equity, typically 50% or more, and obviously is willing to carry up to a 40% second, that would allow for a total 90% combined loan to value, which allows for just 10% down. Minimum 650 FICO, as far as your mid FICO, is what we're looking for. But it's a stated income or asset-based loan, so none of your normal personal income documentation is required. So no tax returns, no pay stubs, no W-2s. In addition to that, we're pretty aggressive on the DCR or DSCR ratio. So it's really not a requirement. I would like to say that we don't look at that, but we don't look at that. So that does also help. Because they're just going to throw stuff at us. But in reality, it's not so much the cash flow, because if, God forbid, in the rare occasion they default, we're not looking to be landlords, so we don't want to keep it for the cash flow. We just want to sell it quickly. So that's really what it comes down to. But yeah, other than that, clear title, the value comes in to support your desired terms. The rest is a foregone conclusion, and typically about 17, 18 days from start to finish is when we can close residential. Commercial is a little bit longer because the appraisal takes a little bit longer, but around 40 or so days and under.
Yeah, so there's a couple things I want to preface up front, and we'll hit them again if the questions come, because again, this is really for all of you. There's nothing magical about the 50, 40, 10. I use it. I'm trying to be consistent because I'm trying to get people to think of being creative.
Right.
But why did we pick 50? It's really simple. That gives you the best interest rate, right? Part of this story is trying to figure out cost of capital, right? So in order to get the best rate from Velocity Mortgage, 50% down is where that starts, right?
Correct.
Could you do a loan at 60? Yes.
Sure.
Right. Then it would be a 60, 30, 10, something like that.
Correct.
Right. So again, and also just so we're clear, you could, without question, do a 30, 60, 10. Think about that for a minute.
Right? I know, right?
Right.
So again, if you're negotiating and finding the right deals, there's going to be some motivated sellers that fit this scenario. It's just, again, I don't think this type of conversation could have been had last year.
No.
Yeah. So right now it's happening. I've gotten a lot of interest, and so people have asked for a lot of pre-approval. So they're making the moves. It's just I don't know if the sellers have actually had enough time to really marinate in this type of concept to really think big picture. But
yeah, it is without question coming. There seems to be somebody went. There you go. Mute them. So the environment's changing, right? I've shared some data about Las Vegas, which for me is the canary in the coal mine. It's happening around the country. And again, this is not a price crash. I want to be very clear. That's not, it may happen, but it'll be next year, not a crash. We may see a correction. Maybe. I'm not calling for one, but maybe. But what we have is sellers, FOMO, like never before, right? And it is only going to get worse. So your point about marination is important. But I want to go back to the idea because I want you all to hear this. I'm not sure everybody hears it when I say this. You could do a 30, 60, 10 or a 60, 60, 30, 10 or a 30, 60, 10.
Right.
Those are very different. Now, why? Your job in all of these conversations is to talk to the owner.
Right.
They are an owner first, right? You've seen my marketing. Folks, I'm spending thousands of dollars hunting for owners that might be open to this. You are talking to an owner first, not a seller. All of these freaking wholesalers and door knocking and text messages and voicemails that I get, they treat me as a seller. I am not a seller today. I'm an owner. Treat them with the respect. Ask them questions. Right? So all my marketing is to owners. They might become sellers, maybe, but let's treat them as owners first. I think a lot of marketing around here and a lot of sales and, trial closes and all of that stuff is you're not hitting it right. They are owners. Ask them questions, understand their story. And then if they have equity, they want to lower taxes, they want to maintain income, all of those things, maybe they only want 20% cash and they want the other going, right? Which would be a different loan. Maybe they want 50%. Right. So really treat them as the owner. It doesn't have to magically be 50, 40, 10. Right. I have brought that for consistency. I brought that for lowest rates, but I don't want all of you to think that is the only option. Right. Talk to the owner, ask them what they want. Also listen. I don't think there's enough listening going on. So that's a little bit on that on the first question. Again, folks, this time is for you. I'm going to just keep scrolling down. So put your questions. That first one was from Chester, I believe. Let's see if this still works. This is not
Chester, working. Morning.
Yeah. All right. Why isn't this working? Okay. Let me make sure this is right. See, it's not right. Why is it not working? One sec, folks. I'm sorry. I have a very small window for these comments, so I want to make sure I don't miss any. Come on, man. Good stuff. Okay, let's just keep going. Can this program be a portfolio or is it property by property? There you go. That's from John Williams.
Oh, excellent question. I was just going to lead to that at some point, but no, you can execute that strategy on a portfolio loan, which I've had some interest. I actually have somebody that kind of started one of the first two that executed that 50-40, concept on a portfolio loan. I think I talked about it to you before, but it was a $5 million, 30 single family portfolio loan. We tried to break them up into two separate blanket loans or portfolio loans, got 15 each. And I wrote up a pre-approval at that 50-40-10.
Yeah.
He's had some interest, but there's a seller agent involved, and I don't know if they understand the concept. And so there's still in negotiations, but there is a good chance that they might be doing a 70-20-10 instead, but it still allows them with 10% down to take over 30 properties.
Yeah. So again, this is why Steven's here, Velocity Mortgage is here. Is again, I've used them. They've given me, they've helped me in multifamily in my office. That's why he's part of this program. I fully intend, part of my marketing on this is to owners of multiple properties. Let's be very clear. I want to buy someone's portfolio, and I've done it before, and I'm going to do it again. So that's my intention. My dream goal is to buy 20 to 50 units via the 50-40-10. And I would love to bring that, but just keep trying every day. Next question. Yeah, that's right. Just keep doing the work. Next, from LD5679. Do you only lend to LLCs, or can you do this as a sole proprietor?
Great question as well. In our case, we don't have the same restrictions as conventional financing that only allows you to hold title as an individual. So in this case, yes, as an LLC, as a corp, any type of entity to some degree. I would say no trust. There are certain, I guess, limitations in that regard, but that you can still do it, but there's other, I guess, legal recourse that you got to have to figure out with, your attorneys and such. But yeah, okay. Typically an entity or individual is fine with us.
Okay. All right. This next one is from Janelle. We've hit one of them, but I'll hit the other two. Prepayment penalty.
Yes. So this is on our 30-year fixed loan, which is called our flex term loan. That typically comes with a 5-year declining prepayment penalty. It starts off at 5% in the first year and reduces by 1% every year until you get down to 1. Mm-hmm. So basically like a 5, 4, 3, 2, 1 step down. Mm-hmm. Basically, the longer you hang on to the loan, the lower the prepayment penalty is. Mm-hmm. If you're paying it off early in the first 5 years. You do have the ability to pay down the principal a maximum of 20% per year without triggering the prepayment penalty. So that is an option. So in addition to that, though, another aspect of this loan, you can add an interest-only option for the first 10 years of your 30-year fixed loan. So it gives you a lot of flexibility of almost like a pick a payment type of situation, where if things get a little tough, you can fall back at least on the interest-only payment. And then if things get better, pay down towards principal as well, additionally on top. So some flexibility, just if that's something you're looking for, but just to kind of throw that out there as well, if somebody's about to ask that question.
Yeah, that's good. So again, do you need to close an LLC? We hit that one. You don't have to.
Right.
Is a full appraisal needed?
Yes, full appraisal will be ordered. On residential, that's typically about 7 to 10 business days for those reports. We could request a rush in that area. They'll typically let us know and tell us the turn time, and then we'll kind of present it to you if that's the case.
Right.
But on commercial, it's about 3 weeks at this point, sometimes a little bit faster. We can request a rush, but that's about what we're looking at. Yeah. Other than that, full appraisal.
Full appraisals, absolutely. You got to remember what all non-QM lenders are trying to do. They're basically trying to create loan products that work for the market, but their end goal is not to portfolio or bank these loans. They're trying to sell them. So absolutely, a full appraisal will be needed.
Right. Yeah. So because at this point we're still beholden to investor guidelines. We're publicly traded, things of that nature. So there's going to be a certain protocol that we have to adhere to. In this case, appraisal is a full appraisal, correct?
Yep. Easy way to find yield. I think that's a question for me. I think when you're talking about yield, I think that's rent-free. That's just a calculation that you'll have to do. Basically, rent minus all expenses divided by cash out of pocket. That's really step one of the course that you have to do. I think that's what you mean by yield. If you mean yield something else, let me know. Ask again. So I think that's what you mean. What is the best way to take a negative yield to a positive yield? Pay less. Yeah. Nobody's supposed to be buying alligators if you're following one rental at a time.
Right.
So again, you have to understand the variables, right? If you're in my course, step 1, it's very simple, right? Down payment, closing costs, make ready is the denominator. The numerator is rent minus all expenses times 12, because it's a yearly thing. But really understand, Futsal, you need to, all of my students and everybody here is a student, you should absolutely play with your spreadsheet. Absolutely. So what do I mean by that? For example, do whatever deal you're on, zero out closing costs. Why is that important? Well, closing costs is real cash out of your account. And the last 2 years, you have undoubtedly had to pay 100% of closing costs. Well, guess what? The world has changed. You can, and dare I say, should ask the seller to pay closing costs. So just take any deal that you've calculated. You probably have $3,000, $4,000 in closing costs. Take that to zero, and I promise you, yield goes up. Second, Stephen, we'll just go here right now. The other thing that I strongly recommend, and Matt, the mortgage guy, gets full credit for bringing this to me last week, but we should all do it. Please listen to me. Get the seller to help buy down your rate. Right. Use that lever. Why is that important? Well, if you can save 0.5% on 30-year money, that goes to the largest expense in your top line of your mortgage payment. Why pay 8% when you can pay 7.5%? Right. So start playing with your spreadsheet. A lot of you get into this, which is okay. You start building it, but really the power of the simplicity is, what variables can I change? All of you, and I've done this in the past, and I'll do it right here. Please take this as a homework assignment. Take 2 of your properties on your spreadsheet and figure out what you could do to increase the yield by 3%. Hint, some of it will be down payment, some of it will be expenses, some of it will be higher rent, but play with it. Understand the levers. And it is shocking, at least in my experience, most of the time, the biggest impact on yield is actually the denominator, meaning closing costs, make ready, down payment. That's why this 50-40-10 is amazing. It has to cash flow, has to cash flow, has to cash flow. You want to get a better yield? Put 10% down instead of 25. You want to get a better yield? Get a blended interest rate at 4%, not 7%. That's why this seller second is so powerful. If you can get a seller second at 1%, which I have done, and you get 50% at 7.5%, your blended rate is, I don't know, 4.5%, 4.25%. You want to crush your yield? Understand the math behind yield. It is so powerful and so easy. So sorry, that was a little bit of a rant, but what do you think?
That's okay. I didn't want to cut you off too, because it was pretty smooth. Long story short, I agree with you with all the levers at this stage, as far as what we're all in rate environment wise, real estate and inventory increase wise. I think it's a good conversation to have as far as a tool to be able to, I think, allow like a win-win situation with the yield and everything else. Because again, with the 30-year fixed rate, you could also apply an interest-only option for the first 10 years of that 30-year fixed loan, and then play with the numbers as far as either a 50-40-10 or a 60-30-10 or however it could possibly be. But now it allows you for a lot of different options, in addition to having the seller pay towards your non-recurring closing costs, which we allow up to 3% typically. So in addition to them giving you a good setup with the 50-40-10 or allowing up to a 90% CLTV, they can also credit some of the closing costs towards your as far as in the deal. So they can add an additional 3% typical credit towards buyers' non-recurring closing costs. There is some exceptions to that rule, case by case, but we really want to keep it around that 3% for now. Just so the buyer has a little bit more.
And you'll communicate. You'll communicate with the deal by deal.
Correct. So, but yeah, so again, just a lot of options for people, just another tool, not to save all, be all kind of thing, but now to have that type of conversation with a seller that has enough equity. And if you can play with some of the numbers, I think it works.
Yeah. So again, CLTV, please define that. Cause we talk about it all the time, but let's define it.
Oh, apologies there. So CLTV stands for combined loan to value. So that would be the ratio of the representation of a first mortgage, which we would be in first position, and a seller carried second, up to a combined loan to value of 90%. So if I'm doing 50% LTV on my first loan and I allow it to a 90% CLTV, that allows for the seller to carry up to 40%. So any kind of combination of my first and the seller second, up to 90% total of whatever the purchase price is basically what that is.
Cool. Next question from Sean. What are the unit number limits? Is there could you do this on a 100 unit apartment, 300? Is there a unit number? Or said another way, a dollar amount? Let's just get all the limits out of the way. Is there a
Yes,
max
dollar amount
dollar?
would probably be more. I mean, there are other moving parts to multifamily and things of that nature, but primarily as far as dollar or loan limit, typically minimum 75,000 on residential
Mhm.
and 100,000 on commercial or multifamily, and then as high as 6.7 million so far,
Yeah.
and that was
So
on a single family.
yeah. So again, I think you know, I think that's this so far, right? Let's bring them a number, right? If you happen to get into an opportunity, well, I mean, let's be clear, right? If you're doing a $10 million deal in the 50, 40,
Right.
90, you got to be able to stroke $1 million, right? That would
Right.
be 10% of that. So
Well,
I think
I've got a deal in right now. It's on a very nice luxury property in New York, and 8.1 million.
nice.
And we're shooting for about a $5 million loan for now.
Hmm.
There's some hair on the deal, so we're trying to figure it out. But buyer currently owns multiple properties in this range and is willing to put 30% down or more. But
Yeah.
the seller in this, I don't want to
Yeah.
put this seller's issues
Yeah.
out on
No,
the internet, but yeah,
no, it's fine.
He's motivated to sell. Let's just put it that way.
Yeah. So again, when you think of unit, really, it's not a unit count. It is a dollar
Mhm.
amount, right? And really, for most of my students, the lower end matters. 75% on single and 100 or 75K.
Got
sorry.
you.
Right.
Right. No, I was going to say, as it pertains to multifamily or units, 1 to 4 unit would be considered, non-owner residential.
Mhm.
So that would all be up to a maximum of a 75% LTV.
Right.
Now, in the case of residential properties as well, you could, do a blanket or portfolio loan to
Mhm.
where at least you have 2 or more properties valued at least 50,000 or more.
Right.
Then the combined value, you're looking at about 100,000 or more. So at 75%, which is our max LTV of 100,000, equals our minimum loan requirement of 75,000 on residential.
Okay, next question. This is from Nick. Good morning. So I have a $1.1 million property that mixed use, 5 residential, 1 commercial. Can I do the 50-40-10?
Yes. Good morning, Nick. That would be actually a good deal. Typically for us, when looking at mixed use, you're going to ask for loan amount. Oh, that's at 1.1. Now on a purchase at 50%, yeah, that's perfect. We're looking at what's that, 550 loan amount off the top of my head. So that works out great because with our particular guidelines, DSCR does not apply on loan amounts below 750,000 on purchases. Yeah, for mixed use or multifamily. So it just typically needs to be at least about 70% occupied, and then mid FICO score of at least 650 or higher, and that's pretty much it. And then down payment as far as verifying.
Let's talk about properties you don't loan on. Let's get that out of the way. So like funeral homes,
right?
Like very specific.
Right. Specialty commercial use as far as bowling alleys, car washes, movie theaters, banquet halls, no adult establishments. Right. Let's see here. Also, no agriculture, so no working farms, no religious or churches basically, and then no hospitality. But pretty much everything else as far as
and mixed use is fine, right? Retail on the bottom, units on top. Yeah.
We love that.
Yeah.
We love those. So
just
typically, and also what state as well, obviously, and what city, because it does need to meet a minimum population requirement. So if you want that detail, it's a minimum 25,000 or more.
People.
Otherwise, if the city where it's located doesn't meet that, then hopefully it's within 25 miles of another city of 100,000 or more.
Right.
Then if it doesn't fit that caveat, last part is if we can just find enough sales comps to come up with a bracket of value, then we'll end there.
Cool. Minimum loan amount. I think we hit it. You want to hit it one more time?
Sure. Residential again, 75,000. Commercial multifamily, 100,000.
Cool. What is the exit strategy for short-term seller carry? So I'll take that one. Again, I want to be very clear. The scariest day in my life is when I had a 5-year seller finance come due at the bottom of the real estate crash in 2010. It turned into be a nothing, but I was deathly afraid of that phone call because I couldn't pay them off. I didn't have the money, didn't want to. The value, it was just bad. It was an 18-unit apartment building. Turned out to be easy. Called the seller. They said, yeah, I get it. Keep paying me. Got another 5 years. So the exit so why is that important? I won't do any seller seconds 10 years or less. My personal experience. How do you get out of these? Well, then you've had 10 years of mortgage pay down. You've hopefully had some appreciation. You could refi them out. You can extend the term. You could sell it. It's really the standard options. But hopefully by then, because again, you only have a first mortgage at 50% after 10 years of mortgage pay down, even at flat appreciation, you probably have enough equity to refi them out, at least most of them, if you had to. So it's either going to be a refi or a sell, or you pay them off. The exit doesn't change. It's likely one of those three. Is that fair?
Sounds fair to me. Yeah. I mean,
Yeah.
that's pretty much the only other options you got. So yeah.
All right. I keep trying to add people and monitor questions, so we'll keep going. Does Velocity care where the 10% comes from? I.e., does deposit in my checking account have to be seasoned for 6 months, or can a person give me a gift? I think that was the end of the question.
Yes, to answer that question, typically, no, we don't have any seasoning requirements on our down payment funds. And yes, you can receive gift funds. It only needs to be sourced, not seasoned. So no 3 to 6 months in your bank account. Larger deposits are okay. We just kind of want to see, to some degree where it came from, if it's, relative as far as like allowed contributions, is, as far as gifts. But otherwise, no, we allow that.
Yeah. So here's a question not really about this topic, but I'll do my best to answer. This is really 50, 40, 10, folks, but I'll answer it when I see one. Best site to calculate rents. Again, I don't think there is a site that's keeping up with fast going rents. Take this as an opportunity to network with property managers. If you were going to use a site, people use Rent-A-Meter. I, again, don't think it's accurate. Talk to property managers, look at actual listings, things of that nature. One of the parts of the course is networking. So if you don't know rents in your area, that's an area of weakness. So start networking. What happens if they have a second mortgage? Can you still do it? I think they're talking about
great
the seller.
question.
Yeah.
Right. So in the case of somebody having existing second, if our new first could be subordinated behind to where the total combined loan to value is still at 90%, we'll allow that.
But you're in first. Let's be very clear.
Right. Correct.
Yeah. And again, there are some times where they have a first and a second and you're paying them off. Like, again, that's the beauty of the 50, 40, 10, right? In this scenario, the seller is getting 60% of the equity minus closing costs, obviously.
Right.
But that often is enough to pay off their first and their second. So you're just redoing this. But again, as Steven said, it can be subordinated. Is that the word? Is that the
right? If the current existing second is willing to subordinate or kind of stand behind our new first mortgage at that time, then yeah, we would allow that. But again, up to a total of 90% CLTV. The second must also be at least typically 5 years or longer as far as term. But that goes along with your 10-year kind of plan. So that's good as far as the initial negotiations on that part. I like this. Other than that,
I like this question from Alan because I was going to ask it. Is there a cap on the amount, how many loans I can get of this type? Can I only bring you 5 loans and you're going to tell me, Zuber, that's enough? Or could I do 50 or 100 of these?
Oh, gosh. Don't threaten me with a good time. I mean, unlimited amount of loans to
because you treat them one by one. That's
correct.
The key. Yeah.
Correct. Because it has cash flow in our eyes, and or it's just, enough sales comps to support a value that we know we could sell quickly. Then we'll keep doing them. Because if there's enough skin in the game with our statistics, rarely do these deals default. So that's how it works out. Yeah.
You're not really concerned if you're only on the hook for 50%, I'm guessing.
No. So far, my record so far in 1 year was 39 loans to one borrower.
There you go. So no limit.
Right.
I'm glad to hear
that. Not at this point.
So here's a question from Vatsal. Do you first try to see if you can negotiate on price? Again, Vatsal, this is really a question for me. I'm talking to an owner. I don't try to hit people up on price. I basically try to figure out what they want. Right. So I did an example of a talk yesterday on the live stream, a surprise live stream. Somebody asked me how I would position this. Basically, if I'm talking to an owner, I want to tell them I have 2 options. I have 2 options for them. Let's assume we've got to the point where they want to sell, right? So we've had our relationships built. They trust me. They say, okay, Michael, I'm ready to go. Basically, what I want to tell them is I have 2 options for them. I have a cash number, right? If they are out, mentally checked out, they want to get on a cruise or whatever they want to do for the rest of their lives. I got that number. And I'll use the same example yesterday, right? The property's worth $1 million in the seller's mind. My cash price might be $850. And I'm just making these numbers up because I want you to see the difference. At 850, maybe it works for me cash because I can come get a loan or whatever. But if they want $1 million, you know what? I can entertain $1 million, but remember the rate environment is up. And given what's going on in the world today with all the risk of being a landlord, right now I'm pitching fear, which he or she knows about. This is what I can do for you. I could pay $1 million and assuming it cash flows and all that other stuff we talk about. Mr. Seller, Mrs. Seller, I can get a first loan on this because I know you want a bunch of cash, but God damn it, the loan rates are really high. It's gonna cost me 7.5% first, which is unbelievably high, as you know, and blah 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 blah. So what I'm gonna need from you, Mr. and Mrs. Seller, is I'm gonna need you to carry 40%, and I'm gonna need you to do me a favor. Because again, remember, I'm giving you your $1 million. I'm gonna need you to finance this 10 years interest only at 1%. Oh my God, I can't do that. But remember, I'm paying you $1 million, not 850. And you're going to get 60% of the money today. You're going to have a note secured. You're going to save on taxes, remove headache, maintain income, all that stuff we talk about in the course. And oh, by the way, if you're able to do that, my blended interest rate, Mr. Seller, is now 4.5. That's why I can pay $1 million and not 850. That's the only way I could pay your $1 million in today's rate environments, Mr. and Mrs. Seller. I have to find a way to get my interest rate down. $1 million doesn't work for me today, but it does work if I can get a rate down. So that's the conversation I have. I don't beat them up on price, but I do give them both options. But it's all these mailers I get in the mail. Everybody's beating me up on price. You guys don't even know I'm an owner, not a seller. So no, I do not talk price first. That's just my opinion. Does the velocity help us set up a service for the seller carry? That's a great question. So they're really talking about the second. Would you help facilitate that, or is that just the seller and the buyers to get done?
That's typically just negotiated between the buyer and seller as far as the terms. But as far as the execution of the note or anything like that, it's usually, depending upon what state, done or drawn up by the closing attorney and or title agent, something like that, or escrow officer. So it just depends state to state, but that's typically drawn up. And it's just a simple little note that gets recorded concurrently with our loan documents when we're ready to go to docs.
Yeah. Yeah. So I've done these. I have millions of dollars in seller carries. It's in the documents. And that's, again, you got to talk to the seller. I have one seller. Don't ask me why, but they want their payments on the 20th. Do I really care if it's the 20th or the 1st? I never really figured out why, but it's not my problem to figure out why. He just gets his payments on the 20th. And I set it up automatically with my account. I don't have a servicer between us. It's really just between you and the seller.
Correct.
Chester says, good morning, Steve.
Good morning, Chester.
Can you, on one webinar, can you do how to do diligence on a portfolio? Yes, we can do that. That'll be the three amigos probably. Yeah. Okay. Actually, let me make sure. What would be a portfolio greater than one property as if there's a minimum? No. So yeah, we've talked about portfolios, more than one property, different asset types, loan amounts. We've hit that. Is the 10% down payment the lowest you can go? Sean asked that.
Great question. And I think you and I talked about this off camera, Mike. So not technically right now, as far as the minimum of 10% down. I'm playing around with certain things as far as, because again, it's all about skin in the game with us. So, when you start lowering less skin in the game, that's just way high of a risk. Because again, we're stated income and you got less than 5%. That's not much of a wiggle room if the market turns. And so, investors get a little nervous in regards to that. So I don't know if that's ever, especially in the environment that we're heading into, I don't know if that's going to be possible.
No, I would say it's not possible. Again, we got to remember, what is Velocity's intention? They're trying to put together loan products with terms that somebody will buy.
Right.
And these buyers are Wall Street, and they don't want the building, right? That's the last thing they want. So yeah, skin in the game is important. So yeah, I would say 10. I would clearly say 10% is the minimum.
At this point, you never know if some lender starts to get desperate and, but
maybe, but I wouldn't count on that.
No.
How does this structure regarding capital gains benefit the seller? So Don, I would ask you to look up a video in the course between me and Bob Langworthy. Bob Langworthy is a CPA. He talks about it. We talk about it exclusively. Realize, again, I can cover some of that. The 40% in this example, 50, 40, 10 would be called a blanket loan, or I'm sorry, not a blanket loan, a installment loan. Use the right vernacular. An installment loan basically means they don't recognize, in my earlier example, that 400K note. That's not capital gains. That is a note, and they will only pay taxes as income is received. So much better tax treatment. And again, there is content in my course already with the CPA that should give you some color. So look for that, Bob Langworthy. It's probably in the seller finance section. I don't actually remember the title, but the video is there. How does the pre-approval process work in the 50, 40, 10 split? Varies, like Michael said. For example, if I offer the idea of 50, 40, and then there's a different split, will the pre-approval still apply?
Oh yeah, no, just call me up. I mean, it's a simple process to generate your pre-approval. Typically, we want some details about the scenario. It's just not like, hey, give me up to $1 million pre-approval. It's like, it doesn't work that way, because
Right.
several things could impact the rate. Your FICO score, the property type, LTV, transaction type, even loan amount in some situations. So it's usually best to just give me a call. I can send you the 2-page loan application. Doesn't even need to be signed. You just edit it on your phone or computer, save it on your desktop or whatever, save it, and then email it back. And I'll typically generate your pre-approval if everything kind of fits as far as the property type we do, location, everything else for right now, verbally, that what you're explaining to me. If it comes to fruition, when we pull credit and get the appraisal and everything else, then yeah, we could generate that pre-approval for you within 15, 20 minutes, maybe.
Yeah, when I hear this question, I kind of think about the basic structure, right? When you're communicating with Steve the first time and giving him the deal, you've got the dollar amount that doesn't change, right? $1 million in my earlier example.
Right.
What
or
the first
change. You could, as you're negotiating, as you're going through numbers, like, oh, it doesn't work now because you only want to carry this, but okay, well then I got to give you this. So
yeah. As long as the CLTV is still current, right? Whether it's 50, 40, 10 or 60, 30, 10 or
90% total is all you have to really focus on.
Yeah. So stay close to that. The 50 does matter. I assume, Steve, this is really a question. Like, let's say they're doing a 50, 40, 10, and it comes back, the seller only wants to carry 20. That's now a 70, 20, 10. The rate's going to be higher, I assume.
Correct. Just a little bit, about 0.5% typically.
Yeah. I want everybody to see that. Yeah.
Right.
Okay. All right. That's cool. All right. Keep going. Do you lend nationwide?
Great question. Typically only 46 out of the 50 states. We're not in the Dakotas, not in Minnesota, parts of Chicago. I mean, I can go over all the details, but 46 out of 50 states. Mainly, you just got to fit the minimum population requirement, and that's why we're kind of not in certain states. Okay. Just not densely populated. Excuse me. So just can never find enough comps.
Yeah. So talk to the seller, not the seller's agent. Great question, Stella. In an environment we're in today, if the property is listed, you're going to have to go through the agent, right? They have a contract to represent that seller. Realize that's a very different conversation. Again, one of the things that I am doing, and I'm being very clear about, Stella, is I'm not looking at first day listings. There's no motivation. But if it gets out to 30 days, there might be motivation. So I did a video probably 2 weeks ago directed at all Fresno real estate agents. I would ask you to look at that video on my YouTube channel, basically saying, agents, if you have a seller that's been listed for 30 days or more that has 60% equity, please reach out to me. I want to offer a creative option, 50, 40, 10. And I want to get you both sides of the commission, right? Which would be 6%, not 3%. And then that should get you a phone call. So educate them, lower taxes, less headaches, maintain income, get the deal done. You'll pay more, but you're going to have to go through the seller. Trying to go around an agent when they have a contract, why have that headache?
Well,
but as I've said a couple of times now, I am marketing to owners today with properties not listed. Right? I'm using PropStream to find 60% equity. I'm spending thousands of dollars mailing these things. If I get a 1% callback or 0.5% callback, it's going to be awesome. So you can market to others, but remember, treat them as owners, not sellers.
Right.
Okay. The higher the DSCR ratio, the better the rate. That's from Jerniel.
Right. To some extent, I mean, the lower the rate, the better your net operating income will turn out to be, which then is use to calculate your DSCR. So, but we do have a way to buy down rate. Again, seller can credit towards your non-recurring closing costs. So that is another option for them to, or another lever to pull to get the cash flow that you needed. But yes, that is an option.
Yep. So this one's for me. Michael, you stress in your book, conservative leverage, 25, 35% down. Absolutely.
Mm-hmm.
He's calling me out on something, I think. Let me get
right.
the question. Understand the 50, 40, 10. You're only putting 10% down. Yes, better blended rate, but 90% leverage. Can you explain the reasoning for 10% down being okay? So again, it's deal by deal specific. It must cash flow day one. It has to be an amazing yield. This is not for everyone. But I believe there are certain situations where you can get a below market rate, a below market price, and everybody wins. And again, part of my job is to highlight what is possible. A 50, 40, 10 is possible. Right. Will they all go that way? No. Some of them you'll put 15% down. Some of you put 20. I look forward to doing some 50, 40, 10s. And this is the guy who is extremely conservative. But I'm going to know what the value of the property is when I'm done raising rents, because most of my stuff I'm buying in this scenario will be below market. I will have a plan for the property. I likely will be doing make ready cost of substantial number, which will force value. So let's be clear. I do not. So 50, 40, 10 will work. I do not see it as the same lunacy of 2005 and 6 with 97% down loans or I'm sorry, 97% LTVs or even 103 that I was seeing, 103%.
Right.
But yeah, max leverage doesn't work all the time. These have to be very deal specific. They have to work. And if they don't, you put more down. This is about what's possible.
Right. And I wanted to add to that. I was just going to say, if it doesn't cash flow from day one, then it's not going to fit. It's just you're not going to walk into it anyway, as far as like being over leveraged. You only take that because, if it's cash flowing, it's just cash flowing. That's what you're looking at, is just yield, not equity yet. You know what I mean? So
yeah, no appreciation, no skinny deals. This is not this. Just because you can get a 10% deal done doesn't make it a good deal. I'm not a max leverage guy at all. As I said in my book, I want most people to be very conservative. But in the environment we are going to, that will undoubtedly be one of the best buying markets for investors. The more creative you can think, the more creative you can deal structure, the better your deals will be. That's what the 50, 40, 10 is to me.
Right.
Do you accept gift funds? We answered that.
Yes.
Minimum credit score? 650
or better.
Any reserve requirements?
Yes, another great question. Typically for vacant properties, 3 months or more. In the case of, more than 3 months of reserves after down payment, that's looked as, a compensating factor. So just in the instance where there's certain deficiencies, say in your credit score or something about the property, anything like that, we can sometimes, utilize certain things about the deal as compensating factors to offset that and still do it as an exception. So.
Awesome.
Yes.
Trying to get all these questions. I need to get a bigger window. It's not very good. Let's see. Minimize. Does that work? Oh, better. Look at that. Okay, good. All great ideas for tools to get deal done with velocity. Assuming you don't lend in all 50 states, how do you communicate these options to other lenders? Do you work with investors outside of contiguous U.S., Alaska, or Hawaii? Do you work like buyers in Alaska or Hawaii?
No, we work with we lend in Alaska and Hawaii. Hawaii, we just don't lend on leased land, so it's got to be fee simple. Some of the land is leased. Otherwise, the only other issue in regards to Alaska as well as Hawaii, the city itself doesn't normally meet the minimum population requirement as far as certain parts of the island and or Alaska. So it's just the population density doesn't help with finding enough sales comps. But in some cases, I've been able to argue the fact that on certain islands, because we have a specific kind of minimum population density, but when I say that's everybody in the island, it shouldn't matter what the city, because where are they going to drive to?
Yeah, exactly. Right? It's an island.
It's an island. So that's the whole population. What are you talking about? So I've been able to argue. It just depends on some of the numbers and aspects of the property. So it just depends, but definitely Hawaii and Alaska, but just densely populated for the city requirement or the population requirement, because it just goes hand in hand with finding comps. That's all.
Yeah. Other than emailing Steve, is there a way to get in touch with a Velocity representative on the state that we invest in?
Oh, I can just email you the list if you want. It makes it pretty simple. So,
Yep.
yeah, I mean, typically,
let's
go
be
ahead.
very clear. So I don't know. How big is Velocity? I have no idea. I've never even asked. Like
Let's see
employee
here.
wise.
Oh, sales reps wise, let's see here. I counted the other day. It was like 55, and I want to say eight. So almost a hundred and
So
no. Now actually, no. Now actually, no. It's close to 88 sales reps or so.
okay. So again,
Yeah.
there are other people.
For sure.
Steve is part of this, right? He's in the course. He goes to vocabulary. He's given us this time. I would ask you to reach out to Steve. Now, if you don't click with Steve or it doesn't work or whatever, all means, but you should give the guy a shot. He's given us time on a Saturday. He gives us time every Friday. I don't know. I would
use whoever you want in all honesty, but numbers don't lie. So number 5 in the company, or I think number 6 today. So we'll see. But yeah. But other than that,
it's funny. I think that's hilarious. I like to take care of people who take care of students, and near as I can tell, you've got great feedback. But yeah, if you don't click or doesn't work, or you have somebody close by, Steve can get you in contact.
If it has anything to do with the last couple of days or even the last week of longer response times, I apologize for that. Just haven't felt 100% the last couple of days, but also just a sudden overflow of interest in the concept. We have to have these longer, meaningful conversations, and it's 24 hours in a day. I still got to shovel food in my face. Yeah, and there's been a couple of people that have had the experience where in the middle of what we're talking, I'm sorry.
Let's be clear. I couldn't imagine a Velocity rep that I haven't spoken with understanding what the 50, and you probably lose an hour trying to educate them on what the hell we're trying to do. But yeah, that's funny.
Well, actually, you bring that up. It's kind of funny. A lot of people didn't really kind of gravitate towards that because I don't know if they really understood the concept to really kind of present it. But a lot of people now, I think, are at least having the conversations with their people as well to say, hey, you might want to bring this up as an option.
Yeah. Oh, by the way, Steve's having success. Follow him. It's funny.
Well, I mean, again, numbers don't lie, and so I don't have to say anything. They can go and look.
They can look at the scoreboard.
Just look. Numbers don't lie.
There you go. So this is a question from Gina. It's probably for me. So the bank considers the 40 or 30% whatever seller carries a down payment, or how do you get lower rate from the bank with the 50, 40, 10? So no, we'll use the 50, 40, 10. So we'll use the 40 in this example. The 40% is a loan. It's a seller loan. The seller is acting as a bank in this case. It's not a down payment. The only down payment is the 10 in the 50, 40, 10. Right. So you're getting a lower rate. You'll get a lower rate from Velocity because the first loan's only 50%. That is fair.
Right.
Right. A 50% LTV is different than a 60%, for example, slightly. But as far as the blended rate that I talk about, that's your job as a negotiator. I'm going to try for 1 or 2% loans because, again, I'm giving them $1 million on an 850 cash, trying to get the best rate. So that's what I'm trying to do. Velocity is not involved in any of that. And again, the 40 is a loan, not a down payment. Sorry, Gina, if I've miscommunicated that. Sorry, missed the DCR requirement on single family homes. Is there a DCR requirement on single family homes? Nope. That would be no requirement.
No.
So this is probably a question for me. How do you talk to the seller to agree to taking a second? Would there anything that would scare them from saying yes to this? Absolutely. Lots of things scare sellers. They have to believe in you.
Correct.
You. So if you come off as shaky, if you come off as not dependable, if your reputation sucks in the area, they're not going to do the loan. If they don't think they're getting paid back, it doesn't care if they have a secure position. No seller wants to foreclose.
Right. Agreed. And I was just going to bring this up. If it's something that could help, the situation, I'm not going to offer. Well, I guess it's just going to, I could talk to the sellers if need be, because to some degree, if they need to kind of get a certain perspective about you as a borrower, I can maybe share with them if at your, approval or allowance, certain aspects about you as far as your strength, credit worthy wise or anything like that. So that might help to paint a bit, brighter picture about you and your, I guess, ability to repay.
Yeah, I think that, that's something that mortgage. I mean, again, with your approval, they'll do. But again, this is about you. Again, I tried to say it earlier. This all starts with you talking to an owner.
Right.
That this relationship will build over multiple meetings. This is not a one call close. This is not a one lunch or one coffee close.
Mm-mm.
Be willing, offer references. I am
Right.
lucky enough where I can offer up dozens of seller finance who've had with me for years and never missed a payment. I'm lucky. You may not
Right.
be, but have references. Have a contractor. Yes, I did a 50,000 job for Caesar and he paid me
Right.
on time with no issues. Yeah, he
Right.
has your property manager. Yeah, he has 3 properties. He's never done. Get your in this case, the example I'm using of $1 million, they're looking to give you a loan for 400 grand. That's
Right.
what they're doing. 400 grand.
Right.
They have got to trust you.
Correct.
Understand and offer references. Understand that, you know, that you're going to give them, I don't know, $2,500 a month or whatever it is. Show them that you are dependable.
Right.
Show them your plan for the building. You're buying $1 million building. They are holding a $400,000 note. Show them your plan. I'm going to change this. I'm going to redo the windows. I'm going to do this. I'm going to do that. They have to believe in you. It's on you to do that. So yes.
Right. But now, in addition to that, I was going to say, if there was ever an issue with you being able to pay the borrower or the seller in this case back, we do, you know, if the seller does file an NOD, then it does trigger a non-monetary default in our eyes. So then we would start to proceed with foreclosure proceedings as well, and make every attempt to, you know, recuperate
your position,
right, as far as attorney's fees as well. So there is to some degree that. Obviously, at the end of the day, the market determines that because we're going to need to sell quickly. But we make every attempt to try to, you know, make sure everybody that's got a lien gets paid off. But outside of that, it's just a risk. Just like any bank takes a risk on you as a borrower, there's no guarantee either that you're going to pay them back. So that's really how the seller looks at it.
Yeah. From Preet, can we talk about best practices for presentation to listing agents, please? Sure, of course. So
Hi,
again,
Preet, yes, I'm supposed to call you back too or email you back. I was going to do it yesterday. I'm sorry. So I just want to say sorry about that. I'll be emailing you today. I just didn't feel well yesterday. So I think I told Mike.
Yeah. People know because we canceled our 8 a.m. call. I mentioned that you were feeling under the weather.
It was mainly my throat. I couldn't talk.
Yeah. So best practice for agent. Again, remember the agent has a contract. They have a listing agreement and that listing agreement is enforceable. So they are the party that you must go through. If I was doing a deal like this, again, you're calling the listing agent. I would not have multiple agents involved, right? I wouldn't have my buyer's agent and their seller's agent. That's just too many levels of confusion. I would go direct to the seller's agent and I would have a conversation. Say, hey, I'm a real estate investor. I only buy deals of cash flow. I need a minimum yield of 10. I see your listing over here on 123 Main Street. I want to let you know that I have 2 ways that I can buy this listing. And I want to give you the option and you can represent me and you can get 6%. 1, I have a cash number, but it's probably lower than your seller wants. And again, I'm just using this as an example. I can give you $850 today on $1 million listing. Oh my God, we can't do that. Blah, 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 blah. Then go, okay, great. I do have this other option where I could pay $1 million, but we do need the seller to give me a couple of things. What I'm going to talk about is seller financing. So first off, stop right there. Because some agents, for whatever reason, think seller financing is illegal. You need to figure out if this agent believes that. And if that's the case, hit hard sledging because you have to get past that first and educate them that, oh, by the way, seller financing is not only completely legal, it is on their standard forms, at least every standard form I've seen. So let's assume they go, okay, I understand seller financing. I passed my license recently. I know it's available. Go, great. Well, I can pay $1 million. But in order for me to overpay, because again, my value is $850, I need to put together a deal structure where my blended interest rate is below market. Well, what do you mean by that? Well, let me tell you what I can do. I have a way where I can get 50% of this deal from a lender at 7.5. And again, these rates could change as markets change. In order for me to get a rate that makes sense on $1 million, I need to get that blended rate something under 4.5. So again, remember, I'm going to pay $1 million, which I don't think it's worth. So I need the seller to carry 400 grand in this example at 1 or 2%. That's the only way I can make this work at $1 million. What do you think? Let them ask a bunch of questions. Unfortunately, you're going to have to do 2 steps: educate the selling agent, and then potentially offer to educate the seller. Because again, the seller is putting trust in you, the borrower, for 400 grand in this example.
Right.
So realize when it is listed, you have more work. You have to educate the listing agent and then potentially educate the seller. So it's a 2-step function is how I would do this scenario. Any thoughts, Stephen or Steve?
No, that's pretty much it. I mean, and it's kind of just, I don't know about common sense, but yeah, in this case, the questions typically are how to structure the second, how to negotiate that, stuff like that. So yeah, I think the course is really where I normally direct people to, because I don't really negotiate anything with the seller. So
yeah. So when negotiating for seller second, do I talk directly to the seller's realtor through my realtor provided? So if it's in the MLS, you got to go through the listing agent, as I've just shared. You're not, do not go around the listing agent. That will,
yeah, they don't appreciate that.
They will essentially spoil you on that owner. So that, again, that's why I am marketing to owners that aren't listed. Again, trying something different. The power of giving seller 2 win-win options should help facilitate it. It facilitates a conversation. All I'm trying to do, folks, is spark a conversation. Tell me more. Tell me more. This should not be you diarrhea of the mouth. Blah. No. Oh, did you think about this? Did you know this? Did you think about this? I can overpay. If you give me this, give me that. It's a wonderful conversation. So yeah, it's all about sparking conversation, getting them to ask questions. How do you structure seller portion of the deal? Interest only for 10 years. That's just a note that will be recorded by the closing attorney or title. You don't have to think about that. It'll be recorded at closing. I guess you do have to tell the seller, hey, we'll do a balloon payment. Because again, some of you will do deals where you actually do a 30-year fully amortized. I mean, there's nothing magical about 10 years. I will just not do anything shorter than 10 years. But hey, could I try for 15 or 20 or 30? I could try. But again, this is negotiation with an owner. Listen to them, see what makes sense, and then you do the deal that makes sense for you. I tell you all the time, I will pay $1 million on an 850 property if I can get the right terms, because all I care about is yield. What do you talk about 50, 40, 10 or seller financing with agent properties on the MLS? I think we've hit that a couple of times.
Right.
I can do 50, 40, 10 deal out of the country. Just K, love you, Steve. Thanks for all you do. I don't know. That's from Lawrence. Is that an inside joke? I don't know.
Lawrence, no, Mr. Hawaii.
Oh, he's Hawaii. Okay, great.
Yeah.
All right. Have a free and clear joint venture property with son. What want to extract my equity? Does Velocity Mortgage do interfamily transaction, which complies with IRS AFR rates? No idea what any of that means.
I don't know what that means either, but I mean, the dynamic of being owned under an entity with father and son, we could do that. Email me at sdao@velocitymortgage.com. And just, contact information, because it's going to take a longer phone call, because there's a lot of,
I don't even know what AFR stands for.
I don't know what that means either, but I can give them my rates, and then we can kind of see if that's within what he means. But other than that, yeah.
Well, there's a question. I have no idea. So more research needed. I have no idea. Sorry, Skip. I think that was the name. Yep. Do both loans have to equal the same for the property value, or can the 50 be at one value and the seller finance at a different value if the appraisal comes in higher than expected?
No, I understand what he's trying to say, but
I don't know what that means.
Well, basically, he's just trying to manipulate what we're lending at and what it's valued at sometimes, because it might be valued higher than what it's selling at. But he's hoping that we're going to use the larger number to base the entire loan off of. So he's getting a higher leverage, just not looking like that on paper. Does that make sense?
Oh, okay. No, I get that now. I just didn't put that together in the question. Cool.
But no, it's the lower of the two between the purchase price or the appraised value, whichever is lower in the case of a purchase.
lower of the two.
Right. Because you can, buy
Yeah,
something and if the value comes in under, then you either got to pay the difference or seller's got to lower the price.
Are reserve requirements calculated for all properties you hold plus the new one or just the new one?
No, just the new one. Makes it simple.
Yeah.
So 3 months reserves for, if it's vacant, if you're acquiring it just for that property. And that's all we're going to calculate as far as the reserves. And then obviously proof of down payment for funds to close, but only needs to be sourced, not seasoned.
Do you consider 401k as qualifying reserve?
Yes, just depends on the situation. If that's all your money, as far as down payment and things of that nature, you're obviously going to need to liquidate some of that to show the flow or the paper trail of where it came from. But no, we would count that.
Okay, cool. All right.
Obviously, you better send it to us, sooner than later because they're going to start to reduce.
Yeah, no worries.
In value. Sorry, not my fault.
Yeah. How low of a percentage rate can both pre-I and second loans be? So the first, you obviously have a floor, which changes all the time. Reach out to Steven to get what that is. Do you want to talk about the floor rate today? I think it's in the 7s.
Right. Floor rate on my first is at 7.25. As far as the second,
I'll take that. 0.
Go ahead.
0 is the lowest. I've done those.
Right. No, and again, it just depends on the scenario. Obviously, it just kind of have to make sense if they don't want to. Yeah, it normally some sellers don't do it at 0, but other than a specific reason, it's like a distress situation, and they're willing to kind of take a hit a little bit due to the property type or something like that. So there's some of that motivation, but if you can kind of make it sense to everybody, and yeah, if it's at least a 5 or longer term, then pretty much we'll take a look at that, at that 0%. But in most cases, it's, what percent or more.
So can you walk through an example of how you arrive at a blended interest rate of 50, 40, 10, having trouble understanding the impact of shorter seller? So this has nothing to do with the term.
Right.
This is like the second is likely interest only in a balloon. If you want to do fully amortized, you can do that, but that's not how I would model it, but you can. But basically what you do, and hopefully this comes across, is you take the first amount, let's see where that is, 500K time, I just did 7% for interest. That's some number. 400K at 1%, that's some number. Add those together. That gives you a feel for what the blended rate is. Because again, if you have half the loan at 7 and roughly half the loan at 1, the blended rate's going to be in the 4s. That's, there's a math formula, which I'll try to get, and I'll do a whiteboard discussion, but that's not for this video. So I'll take that as an action item to do the math for you.
I mean, I got a mortgage calculator if you want to do that.
No, it's fine. I'll do a full deep dive on it.
Okay.
So I'll do that. I might do it tomorrow, actually. All right. So I'll do a full math for the full YouTube channel on that, probably tomorrow or the next day, whiteboard on how to calculate the blended rate. But just logically speaking, if half's at 7, half is at 1, your blended rate's in the 4s.
Right.
And it's not about term. That was a comment, Howard. Nothing to do with term. It's all about the rate, cost of money, cost of capital. What collateral is offered to the seller in the event that you don't pay or the seller finance portion? In other words, what is their incentive? Do they get property back, or does the velocity get? That's foreclosure law, because this is a recorded NEAT. This is a second. Is it a second trust deed in California?
Correct.
It's a fully recorded transaction, foreclosure proceedings. There's nothing. The seller is, for all intents and purposes, a bank in second position. So they have the same rights as a bank in second position.
Right. And somewhat the same risk to some extent. But again, it goes back to them trusting and believing in you to even, execute this type of loan setup. So I think that's maybe another whiteboard and or maybe added to your course as far as, having them build that trust, because that's, I think, the most important part. Otherwise, without that,
nothing there.
I mean,
don't be that guy or that girl, right? Understand that you're dealing with an owner who's, in our example throughout this video, is going to loan you $400,000.
Right.
That should not be taken lightly. Who should we use to write up this kind of contract? All escrows can do this. I don't know about all. All is a very, any title escrow or closing attorney will be able to take your basic instructions and create a loan out of it. You can
Some
go
might
to a
charge
lawyer.
more than others, I'm sure.
Yeah. Oh, believe me, the fees may be very different. I did. So I have in my course, right? All of these members of course, I did a 6 and 20 loan. I paid an attorney to write that because it was very unique. So you can pay attorneys. You don't have to.
No.
You'll basically need who the borrowers are, the dates, the terms, the prepayment, what happens if you don't pay property. I mean, there's 12 or 18 variables that title and escrow will know, and they'll write it up for you.
Right.
I'm still learning about this and keep confusing 50, 40, 10 seller financing and subject to. Am I right about owners who opt to seller finance trends to be low risk to default, but those who opt subject to? I don't. So again, seller financing 50, 40, 10 is not sub to. Is not. This is very, very different. They don't even belong in the same paragraph, let alone the same page or even the same chapter. Very, very, very not the same. These are notes. These are financial instruments. The seller dies. It's an asset that goes to their heirs. No. Subject to is very different. Don't confuse. It's no. And we don't need to talk about risks and defaults because they are very, very different. It's a very different structure. Dan Zuber, that was a very great answer. I'm going to transcript that and write a sales script from all of us to use. Thank you. Any thoughts on making a PowerPoint? Yeah. So again, in the course, Jason Pritchard created a, I forget what he called it. He's going to talk about it next week. He and I already agreed, but basically a PowerPoint documenting he's a safe investor, right? He raises private money. We talked about that 2 weeks ago. Go look at Jason's playlist. He has, and he actually allowed you guys to have it. If you wanted it, you were supposed to DM him on IG. And I wish I know what he called that. It's basically a brag deck. I don't know what he called it. He called it something else. But basically, this is who I am. This is how awesome I am. Look at all these money I borrowed and paid back and all of that. Yeah, I think a PowerPoint's great. Anything you could do to make the seller feel comfortable that their 400 grand is going to come back is a win. I think a PowerPoint with your story, your examples, your references, awesome. Do it. And if you do it, put it in the group so others can follow. Thank you. Do I need to get pre-approved from Velocity first before I start reaching out to sellers and sellers agents? I have my answer. What's yours, Steve?
Yeah, I mean, I think it's a strong tool for you to kind of make that, at least that initial, impression as far as having all your ducks in a row to say, hey, this is legitimate. I can make this happen instead of just a concept, I guess, in the case.
Yeah.
But no, the pre-approval process is pretty fast. I just got to have, again, it makes it easy. Just email me. I'll send you the 2-page loan application. You fill that out. It's just the basic information that we're looking for to at least get started, property address, experience level, if there is any, information on the details of the deal. But it usually gives me enough to just that, and then let me know what your mid-FICO score is, best phone number to reach you back at. And if there's any questions, I'll let you know. Otherwise, I'll give you a quote right away. If that fits, I'll generate your pre-approval within 5-10 minutes right after, if you say yes or no to, what you like as far as terms. But it's pretty fast. So I would suggest yes. Long story short, yes.
Yeah. Again, I think you got to remember, what are we talking about here? We are talking about having either the agent or the owner have faith in you. So if you just reach out to them without having a pre-approval,
right,
it may start off on the wrong foot. I think having a base conversation, which might take minutes, and having that letter in hand, right, to forward is probably a sign of strength. Do you have to? No, of course not. But again, remember, you're talking to an agent, talking to a seller. They may ask you, well, how do I know this will work? And if you then have to say, oh, wait, let me go get a pre-approval.
Right.
That's kind of taking a step backwards, right? I would strongly suggest
cover letter.
Yeah, something.
Right. Just simple. Just lay it all out for them so they don't have to guess or play detective. What's he talking about? Give them a great cover letter that bullet points, like here's what, the pros are, the advantages. Here's what I'm looking for and how it makes sense and so on and so forth. So as much detailed information where the agent, the seller side doesn't have to do too much guessing to explain it to the seller. I think it's a win-win for everybody. So a cover letter, just a simple, kind of brief description of what you're looking to explain to both parties. And I think along with that and that pre-approval, maybe, copies of something for proof of funds to close, that's pretty strong.
Yeah. So I think it's a wise idea. Do you have to? Of course not. But you don't
Right.
want to go, you don't want 2 steps forward, 3 steps back.
Well, unless you're like a master negotiator, just
Yeah,
great,
I don't
just
know.
verbally, yeah, okay. But I think where somebody has something in hand where they don't have to guess what you're saying over the phone is usually a stronger tool to have. But
Mhm.
that's just my
Yeah.
suggestion as well.
Yeah. So AFR apparently stands for applied federal rates. It's the minimum rates charged on a loan to avoid implied interest based on loan term published by the IRS as applied to seller notes. Awesome. Thank you, Skip. Again, more data that I need to uncover.
Right.
Jag, how can you have a 0 rate loan? So again, these are all things that you can calculate, right? So I have one loan at 0. It was a seller finance deal. They took first position. That's what they wanted, frankly. So we basically had to calculate what the implied interest, I think it was called. I had my CPA involved and basically said we had to offer X above the price they wanted to basically give them their implied interest. It was a very interesting conversation with my accountant, but the note reads 0. But yeah, that is a conversation because again, you have to have a certain level of interest. I forget what the legal terms are or the CPA terms are, but yeah, I'm going to go for 1, 2, or 3. I do have one loan at 0 that my CPA helped me calculate what the actual purchase price had to be to make everything legit.
I'm wondering if that's what Skip was referring to as far as that RFA or RAF
It could be.
rate.
Again, that's why you have CPAs and lawyers involved. And
Right.
I don't pretend to be either.
Me neither.
How can I do this? Show me the right way.
Right.
I don't want to get in trouble with the IRS. Is there a strategy 50 cash out? Oh, can you do a cash? Oh, wait a second.
No.
Is there a way you can ask? Is there a strategy 50, 40, 10 cash out refi option?
No.
I don't think so.
Because where does the 10 come from? The 10 is the down payment. So in a refinance, what are you putting down payment for? You're getting cash out. So now what it could be where if we're getting cash out on the first and the seller is willing to then take, a new position on the second at a higher CLTV up to 90%. Does that make sense? Mike?
Yeah. I'm just trying to play with this. I'm just trying to see.
Because they would have to resubordinate after our new first.
Yeah.
Most of the time people in second position don't want you to pull cash out. Yeah.
Yeah. That's
so not likely.
Not likely.
Yeah. I mean, I can get struck by lightning, but
yeah, it's not likely.
Yeah.
Not likely. Do you finance investors from Canada as individuals or in LLCs registered in the US?
Oh, great question. Yes, thank you very much for asking. We do finance foreign nationals. So yes, bring me all that Canadian business. We've done some recently. Actually, I've got a one of my clients, a broker now, that is working with a pretty large Canadian investor so far. We've gotten a couple of deals so far, and now that they know that they have an option for as far as financing, they're now looking for other opportunities. So yes, to answer your question, we do lend to Canadian foreign nationals. You're limited to 65% LTV, or excuse me, yes. So in this case, so that 50, 40, 10 still works. Yeah.
So here's a good question. They're all good questions, but this is one I don't know the answer to. So it's okay for Velocity Mortgage loan to be fully amortized, i.e. 30 years, the seller to have a balloon. Does Velocity Mortgage care the balloon is dealt with, i.e. refinance or extension?
Again, the initial loan or the initial acquisition, the underwriting is just for that term at that time. Once we sell the loan, there's no.
It doesn't
matter.
You hold these loans for months, not years.
Maybe. Right? No, not years. If we can help it, then no.
Let me ask this question differently because this is where I wanted to go with this. I wanted to answer Sean's question, then I want to ask my pivot on it. When you're looking at a 50, 40, 10, would the 40 say with a 1 year prepay be a problem?
Well, again, for the purposes of underwriting, we're going to want a minimum 5-year term.
Oh, so there you go. 5 years.
Second.
Okay.
Right.
Perfect.
At least for the underwriting. But if you paid off in a year.
No, I wanted to hear the minimum because again, minimum 5 year. That's where I was going. I must have missed that earlier. So
no, that's okay. Yeah. So minimum 5-year term on the second to make it legitimately, again, I would assume with the tax, benefits that might be a minimum requirement as well, just to make sure that it fits the federal laws to make it, interest and so on and so forth. So, or tax write-off or tax implications. Don't take my word for it. Go to your CPA or
Yeah. So Skip for the win again. Thank you, Skip. Imputed interest was the word I was looking for earlier. So in my example, 90K purchase, 0% interest. Because it was 0%, there is this thing called imputed interest. I had to go back to my CPA, calculate what price I would have to agree to so that I don't get hit with that. I think we agreed at I remember what it was, 94, 96, something. This was years ago. But yeah, imputed interest is a thing. Again, talk to your CPA. I do not pretend to be CPAs or lawyers, but it is possible. But you can get to a number that works for both sellers and you. Yeah, that's why you talk to CPAs. Thank you for the imputed interest. I drew a blank on what that word was. I've only had to use it one time. Good morning to all. I have a family that's in pre-foreclosure. They are behind $30,000. Can I offer them seller financing? If so, how would you structure it? The house was 60. Oh, the house has 60% equity. Yeah, you could certainly offer this. I mean, it would have to work. You'd have to make sure they have enough time, because sometimes they're a day away. Steve can't pull miracles. You have to get a full-on appraisal. The 30K would go into, they would lose that equity. I would probably reach out to Steve and have questions, because I think there's a lot more hair on this than you could.
Correct. There's some moving parts that we need to discuss. That's a longer phone call.
Yeah, I can answer.
And we got like 12 minutes left.
Yeah, so you can. I mean, this is the key is equity, but here's the deal.
Right.
This case a cash answer might be the right answer.
Right.
Again, I don't know the story of this one. Call Steve, email him, whatever.
Let's at least crunch the numbers to see which course of action makes most sense. Because at the end of the day, if the numbers don't lie and going all cash, whatever else makes more sense, I'm always going to suggest that. So
yeah, if the price goes down 25%, let's assume after 10 years, then the minimum seller deal is 10 years interest only. Velocities 30-year amortized, so no worries. And seller does not want to extend terms after 10 years. Could you please discuss the worst case scenario? Yeah, the worst case scenario is you have to sell the building. I mean, right? Or again, so I've had this happen, and I did a whole video on this. So let's just play this out. You buy $1 million property, and the property crashes 40% for whatever reason. It's now worth $600,000. Velocity's mortgage is good. 30-year money doesn't matter. But now the seller is looking at this. If the seller wants to foreclose on you, Kaushik, they have to write a check for almost $500,000. They're in second position. They're not in first.
Right.
They have to write a check to pay off Velocity. So could a seller do that? Sure. Will they do that? No chance in hell.
No.
This worst case scenario is new investors trying to scare themselves into something. I had this happen. And the seller's like, I had a 10% second. I bought an 18-unit building for millions of dollars. The seller took a 10% second. It refied at the bottom of the market because I'll never do 5 years again. The seller's like, Michael, I don't want to pay off the first. I'm not going to foreclose. I will extend. No kidding, you'll extend. So the worst case scenario is the seller writes a check and takes you out.
Right.
Is it likely? Less than 1%. But that's your worst case scenario.
Right. And again, it goes back to them trusting in you, and that's why they take that leap of faith. Mm-hmm. So
yeah, I want to be very clear on this. I did a whole video on it. The seller second in a worst case scenario, they don't want to pay off the first. They're in second position, folks.
Right.
They're not paying it off. They don't want the building back. They want their $400K in our example. Yeah.
Right.
Is there a calculator you play with the 50, 40, 10? No, not yet. I haven't created one. No.
No, I mean, it's pretty simple. If you just tell me the FICO score, LTV, loan amount, transaction type, and property type, I can give you the rates, and then you can kind of plug in what you want as far as certain mortgage, payment calculators or something like that. And you can maybe do something like that, but it's not a long, kind of conversation. If you just want some quick terms, just so you can kind of plug in something, but you got to give me specific information. It's just not, hey, what's the rate on this? It's too vague of information. So some basic information will allow me to at least give you an accurate quote. Otherwise, I can only, give you ranges.
So velocity is okay with the second closing at the same time, thus creating 90% encumbrance. Most commercial lenders don't allow that. You are absolutely okay with that.
Correct. 90% CLTV or combined loan to value
Closing same
is
day.
allowed. Yep.
That's the whole point of this thing.
Right.
Does anyone have a standard cover letter? Nope, not yet. I guess it's something we should work on.
Yeah, actually.
Do we have a spreadsheet in the course that helps you calculate? Nope. I just created this 50, 40, 10 out of thin air. I have not modified the spreadsheet to do that. You're very welcome, Sean. Oh, look at that. We got to the end of the questions. That's awesome.
Did we? Oh, wow. Okay.
Yeah, we did, I think. Yeah. All right. So you're very welcome, everybody. So Stephen, I want to thank you for meeting you. You gave us an hour, almost an hour and a half on a Saturday, right? This is non-business hours for you. So know that I appreciate you, know that all the students appreciate you. And again, this is going on YouTube. So if somebody wanted to reach out, how do you want them to do that?
Again, just email me sdao@velocitymortgage.com. In the subject line, please put just the acronym ORAAT, just so you can mostly get past my firewall. Body of the email, just a simple description of what you're looking for. If you want a quick quote, just give me the, again, property address would be great. Otherwise, property type, loan amount, or as far as maybe purchase price. And then if you want to quote at the 50% LTV and then max 75, and then of course your mid-FICO score, best number to reach you back at. And typically I'll be in touch right away. If there's anything that it's missing and I can just call you and try to get that quick answer, I'll try to reply, much quicker. But again, thank you for the opportunity, Mike. This has been, a lot of fun. And yeah, other than that, have a great weekend, folks.
All right, everybody, take care of yourself. I did see one question. Does he invest in Colorado or do you support Colorado? The answer is yes. Again, see earlier in the video for head count or whatever.
No, we love Colorado.
Yeah. Email sdao@velocitymortgage.com. Again, 5 letters in the title, ORAAT, nothing else. Not high, not this, not that. 5 letters in the title, ORAAT, gets you past the firewall. Then go nuts, ask questions. Again, Stephen, thank you for doing this. 90 minutes on a Saturday, which is, again, it's 12:30 for you. You are in the great state of Texas. So it's kind of midday. So, man, I appreciate you. Take care of yourself. Thanks, everybody. Bye.
You too, guys. Take care. Have a good weekend, folks.